Hey guys, welcome back to my YouTube channel. So in today's video we are going to talk about what is fair value gap, what is chalk, breakout structure and liquidity, right? So without wasting time, let's get started. So I will teach you I should show you like this. So as you can see, what is chalk? Let's start with the chalk, right? So this is higher high, higher low, higher high, higher low, higher high, higher low, then higher high, and this is the lower low, and then it changes the trend, right? So as we can see, like this, all are the breakout structure. Over here also, like all of them are breakout structure. But change of character happens where? The chalk is change of character, right? So change of character happened over here, because it changed the character to the upside and changed the character as a bearish over here, and then it goes and mitigates a fair value gap or point of interest, and then it gives another leg, another move to the downside. Okay, so this is breakout structure and this is chalk, and I don't use supply and demand, I just use the gap between over here. There will be a gap between over here also, and I use the order block, but order block is not a one candle. Order block is a consecutive upward candle in this scenario as a bearish. Like order block will be like recent free consecutive upward candles. Those will be the only order block. Okay, so let's see on the live markets. As you can see, this is the daily time frame on SPX 500, and as you can see, it took a liquidity, right? This is the sell side liquidity which is taken over here. Okay, so I will remove it, and as you can see, now here it comes that what's the fair value gap, which I mark on my small videos and all. So this is the fair value gap. As you can see, the gap between this candle and this candle's wick, this is the fair value gap, right? Because it didn't get touched, like this candle's low did not get in contact with this candle's high. There is a gap between this. So what we expect from this? We expect that price will go and fill this gap, and then it will fall down. Okay, as you can see, there is a gap bit over here also. Because why we will not consider this gap? We will not consider this gap because the bias is bearish, right? Like the trend is going bearish. So why we will be looking for the buy side? Like buy side gap, like we will look for the gaps which will be suitable for us to take shots, right? Because it's going to the downward. So by doing our technical analysis on daily time frame, then we will fall back to smaller time frame like 15-minute chart. You can go to 4H or 1H or whatever time frame suits you. You can use that, right? So now let's see what happens. And here the market, new day is open, so we will mark it. Okay, this is a new day candle open, this is the daily candle open over here, right? So don't get confused, this is the daily candle open over here. So as we can see, market is here, it comes. Okay, so what it did, it take the liquidity from this relative two equal highs. I should mark it, right? Buy side liquidity, these two highs, the liquidity is taken over here. Okay, and then it shorts down. So we will fall back to the smaller time frame because we cannot see any setup over here, right? So we will fall back to the 2-minute time frame. So as we can see, as I said, it took the liquidity, right? So here the pictures are clear. So it took the liquidity and gave a change of character over here, and then goes and mitigates this gap, and then it shorts down and take this swing low. Can you see this swing low? I should wait. This structure is broken, right? As you can see. So now when this structure is broken, which candle made it to get broken? Like which candle did it and made a gap and broke this low, this candle right over here. So can you see the gap? See, like pause the video and see that where the gap is, right? So here comes the fair value gap. Okay, and this is the fair value gap, and you will have to be little bit at New York time frame. You will have to be little bit more focused, because you will be not able to get these type of gaps, right? So you should be focused on New York time frame. So there is the gap, it fills the gap and then shorts down for the liquidity on the daily time frame, right? So let's see, and then when it make a gap and then it fills the order, so where we will be entering in the markets, we will be entering over here above this candle. Okay, you don't be short and precise and do like this, take your fib and just mark half away. You can do it for smaller stop loss, but sometimes you know what, like you miss the entry, right? So for being on the safe side, put your orders over here, and then put your stop loss above this, or you can put your stop loss above this, but it's a big stop loss. But we should put our stop loss over here. Why? Because this candle made the gap, and this candle was responsible for breaking this swing low, right? So it broken the swing low and then it went to this liquidity. What's this? This is sell side liquidity. Okay, so it went for the liquidity and it swept the liquidity. So the buyers over here, like those who were buying by making this as a demand, so they get like brutally killed in this, like, because market didn't respected them and it went down, right? So we will target our what, like on daily time frame, what our target was? Previous day low, right? So previous day low, mark the previous day low. Why? Because previous day low has a sell side liquidity and it can push market to the upside. Okay, so we fall back to 15-minute time frame. Yeah, as you can see, it went down and took this, but we will not be happy over here. So where our exit will be, here comes the premium and discount zone. It's only used for exiting the trades. Okay, so we will pull out our fib and put this over here, from this swing low to this swing high, and this area over here, it's a premium zone. Over here you will be selling off, okay, and you will be closing your trades over here on discount zone. Here you can buy. Okay, so when you see a sweep of liquidity over here, so you can buy and you can go for scalp from here, because the daily bias is bearish, so you should do scalp. Because if you wait for a big move to the upside, so it will be really dangerous, right? Because it's the daily bias is bearish and you are going against the daily bias, so it will be trouble for you. So now, as we took our trade from the gap right over there, so now tell me that where can you see the gap between this zone? Where can you see the gap? Yes, this fair value gap over here. Yeah, this. Okay, so what our target will be? Our target will be this fair value gaps make over here. So 1:9R. So this is the trade. But see, when it mitigated this, then see how you can see the reaction from here, because fair value gap always gets respected. And now you will be saying like, why this buy a fair value gap? Like this fair value gap is responsible for a long, right? So why is this is responsible right now? This is responsible because it's in the discount zone. This is in the discount zone, as I told you before. Because this is discount, you can see buy over here in intraday. Okay, because at an afternoon session you can see for a buy over here after 12 o'clock. So we got 9R over here, and as you can see, price comes back and makes a gap, and it respects a gap and take the liquidity. Can you see the gap over here? See how it respects the gap and went up. And over here also, as you can see. So this is the fair value gap theory. So fair value gap got respected, so it's going to fill the gap which was over here, which was made by at the daily open the market shot down, so it made a gap over here. So that's why it's going to fill, and then we can see a move. It can go and take the liquidity above this. I will make a video on sell side liquidity, buy side liquidity, but today we learned about the fair value gap, right? And we learned about how to enter the markets and where to exit. And in next video I will tell about order block, and we're gonna talk about order block and the buy side liquidity and the sell side liquidity. Okay, so till then just practice this fair value gap, see in your charts, go through your charts on TradingView and see that how price respects the gap. So till the next time I will bring another video for you guys. Peace.